the first thing that I always come back to, I know a couple of those people who have money, they have really good incomes, and they want to invest in real estate, but they're just too conservative, too cautious, too consumed by the analysis paralysis, whatever. So I know people like that personally. And the thing that I always say, to get over that and start taking steps 1, 2, 3 to get you to actually owning a deal. Number one, you got to know your numbers, know what your numbers are and know what your objective is, right? Are you investing for appreciation? Are you investing to park cash? Are you investing for cash flow? What are you looking to invest for? Right? What's the reason why you want to invest? Maybe it's taxes. I see a lot of really wealthy investors who are like, buying deals at super low cap rates just for taxes. So every person's situation is going to be a little bit different, but figure out what those numbers are or what that reason is, and then figure out the numbers behind that. So for me, a lot of it's been cash flow focused. I thought, hey, if I can buy a deal and it cash flows, I don't really care how much equity I've got. I don't really care how much, if it goes up or down or whatever. And fortunately, things have all gone up over the last, 6, 7 years. But as long as it cash flows, I feel like I've got pretty good insulation, whether the market's up or down. So from a long-term perspective, that works for me. My strategy is now kind of shifting where it's not as much cash flow focused, but I need a deal that at least breaks even or has massive value add. So figuring out why you're investing, what you're looking for, and then from there, it gets a lot easier because if you know your numbers and hey, I need a property that cash flows $200 per month. Maybe you're just getting started. You're looking for a single family home, a townhome, whatever it might be, and you just need that first deal. If you need a property that cash flows $200 a month, when you see something pop up that looks like it might be a deal, you run the numbers on it. If it's at $200 a month, you just got to pull the trigger. You got to make an offer. And that's something I've learned over the last couple of years, especially as the market's gotten more competitive, is if you see a deal and it matches your numbers, make an offer, even if it's less than what they're asking. If they want $500,000 for the property, but for you, the numbers make sense at $450, just make an offer at $450. You never know if they're going to accept it or not. So that's really the starting point, I think, in my opinion, is like figure out why you're investing, know your numbers, and then start making offers based on what works for your numbers.